Stop guessing entries in the market, because that is exactly why you are losing your trades. Most traders are hopping into the market with no clear plan, no clear zone, and no confirmation, just hoping price is going to go in their favor. In this video, I'm going to show you a simple 3-step process that will help you consistently find your entry zones and signals, which means no more guessing. Once you understand this, your entries will never be the same again.
All right, y'all, so very straightforward video today. I'm gonna show y'all how I find my high probability setups, which aka are just my entry zones, and how that comes down to just applying 2 time frames. Well, finding 2 time frames that are in sync, which is either the daily and a 4-hour or the 4-hour and a 1-hour, and then simply just looking for a bearish engulfing. I'm not doing anything more, anything less. I use 2 time frames. I look for 2 time frames to be in sync. Once I have those 2 time frames to be in sync, I then use that secondary time frame to find my area of interest / my entry zone, find that rejection, find my signal, and ride this trade. So in these examples, I'm gonna show you the Florida market. Again, I have 2 examples, Florida market, 2 examples of counter trend opportunities. When I'm syncing the 4-hour and the 1-hour, those are my counter trends. When I'm syncing the 4-hour, the daily and the 4-hour, that will be my Florida market. And I'm simply going to show you how I break down the markets to find these high probability setups. I will not be doing a full top-down analysis. I'm simply just showing you how I apply 2 time frames to find my entry zones and to execute on those positions, simply looking for our bearish engulfing. And if you don't know what a bearish engulfing is, a bearish engulfing candle is simply you would have a bullish candle that is then followed up by a bearish candle. And on this bearish candlestick, we have the entire candlestick, including the body and the wicks, engulfing past that previous bullish candlestick's body and wicks. This is why it's called engulfing, because we are engulfing the entire bullish candle. So this is my entry signal. This shows me selling momentum in our direction, and this is a strong confluence into those trades. So when we are looking for time frame or our entry zones, again, I'm simply looking for the daily time frame to show me some type of structure break towards the downside, which would be in sync with the 4-hour, giving me a structure break as well. If you don't know what these trends are, a bearish trend or a bullish trend, including the lower lows, lower highs, higher lows, go check out our video. I already did a video talking about how to identify your structure points. It is straight to the point. It is very simple and beginner friendly. So if you want to go check out that video, again, go to my YouTube channel, and it's talking about how to identify market structure. Once you're able to learn that concept, you'll be able to do everything else in the market with ease. I promise you. So when we're looking at the daily time frame, I'm simply identifying what trend are we in, bullish or bearish. In these examples, they will be bearish. So when we are bearish, I'm looking for the last structure break on the daily time frame to be presented, which is around here, which now allows me to have that new lower high, my new lower low. Now it's about where can we see price pull back, reject, and continue to, aka where can we find our entry zone? Well, as soon as price forms a break of structure on the daily, I will be looking for the 4-hour to form that break of structure as well. Again, the structure will look different, but as long as price is in sync, performing a break towards the downside, that is what I will be looking for. And then as soon as price now performs the pullback, again, being in sync, that is what I'm looking for out of the market. But let's slow down. When price gives us a break of structure on both time frames and we are in sync, now it's about how do we find our entry zone? Well, simple as can be, we're looking at the secondary time frame, and I'm looking for the last break of structure in the market. We obviously can see price in this bearish trend on the 4-hour time frame, giving us the overall break of structure of the continuation move towards the downside, breaking past our lower low. But where is the last structure inside of our overall trend? That will be here. This is when we mark this off as our last structure break, and we mark this off as our area of interest, or in other words, our entry zone. And I will be then looking for price to pull back here on the 4-hour time frame. Once price pulls back here on the 4-hour time frame and starts to form that rejection, this is automatically going to allow the daily time frame to have the pullback towards its recent break of structure as well. Both time frames now will be performing the break and retest, and then after the 4-hour taps back into my zone, I'm simply just looking for a bearish engulfing signal. This is the simplified version. We're not getting all the way down to the precise entries. Again, if you want to learn how to do that, I did a video on how to find the precise entries, sniper entries in the market, we can call it. Go check out that video. But this is simply showing you how to find your entry zones and what entry signal I'm looking for. And if you don't want to do the extra steps like breaking down the market, finding those precise entries, using the lower time frames, and you just want to use these two time frames together, I'm showing you how easy it is to do so. And so after price then presents us with this entry signal, we then just enter the trade. And it's mandatory as we're entering the trade that price is getting back below our daily break of structure. This just gives us an extra confluence, showing us that we are now back below a recent area of support, and we can now see price continue to move towards the downside, treating that recent area as support now as newfound resistance to continue that push. And then same thing on the 4 hour and the 1 hour, simply looking for the recent break. I then identify my entry zone off of the 1 hour time frame or the secondary time frame. Last break of structure was around here. We look for the break and retest of that last break, which allows the 4 hour to do the same entry signal, and we ride this trade towards the downside. And then the only difference on the 4 hour, if we are below our zone, well, entries want to be below our daily zone, but only if we are at some type of daily structure point. And again, I'm gonna break it down because it's gonna make more sense. If I'm not at like my daily structure point and price isn't above or below, if let's say I'm looking for sales and price is above, I want to wait for price to be below. But if I'm looking for buys and price is below, I want to wait for price to be above and then execute on that position. Make more sense once we get into the charts, which we are about to do right now. So I'm about to show y'all how I find entry zones, syncing two time frames and simply just looking for a bearish engulfing on the chart. So give me a second. All right, so I went to replay mode, so don't really worry about all these drawings to the right. That's just me journaling my trades on the market. Well, on the charts, I should say. I don't delete them, just leave them be. So first things first is that I always start on the daily to identify what type of trend we're in and identify the structure points in the market. So on the daily time frame, I saw clear as day that price was in this bearish trend due to us forming the recent break of structure. I got confused for a second, I apologize. The recent break of structure around here, we saw price then have this huge pullback in the market, but we never broke past our lower high, which indicated that rejection and us maintaining in this bearish trend. So price then had the continuation move towards the downside, and as we had this continuation move towards the downside, we then had this break of structure take place around here on the daily time frame. And if we just go into replay mode a little bit more, right, going into replay mode so we can identify the break. As soon as price gave us this break of structure on the daily time frame, if I go towards a 4 hour time frame, what's going on? That same thing, the same break of structure having the break around here. So if we go towards the daily, we see that the daily performed a break of structure of its own happening there. We see that the 4 hour performed a break of structure of its own happening around here. Both time frames are in sync, doing the exact same thing at the exact same time. This is what we look for. So now we identified the recent break on the daily time frame being here, which is then marked off as daily structure, right? And now how do I identify my entry points in the market? Where do I find it? Well, I know that the daily and the 4 hour are in sync. Like we know, if the daily and the 4 hour are in sync, what are we using? The secondary time frame to find our entry zone, which will be the 4 hour time frame. So now how do you find your entry zone? Well, the entry zone is simply the last break of structure in the market. We see price go from this bearish to bullish to then back bearish, performing the last break of structure around here. This is when I drew out my area of interest with that box tool, and now this is my entry zone I would be looking for price to pull back to. And if we look towards the left, as we're drawing out this zone, I just want to now count the number of rejections towards my zone. I don't know if y'all watched the other video before. I think it was a video before this one. I talked about price respecting your structure points, treating it like a wall. If you have a weak foundation, right, that will allow price to get a breakthrough of this wall, only tapping, or for example, right, say if we have a wall, I'm punching at this wall. If it only takes me one try to put a hole in a wall, you wouldn't use it for your house, right? Because it's weak. It's not It's not something I want on my house. I don't want weak material to build a house. I want strong material. So now if I'm punching through this wall and it takes me 2 times, 3 times, or even 4 times to even make a hole in this wall, that's the material I want to use. This shows me a strong, in a sense, foundation of structure, of material, right? So now it's the same thing with price. If I see 2 or more rejections towards this area of interest, I would continue to use this zone as an entry zone because this is a strong support level. It's a strong foundation of price not wanting to break through, but respecting and bouncing the opposite direction. So we see 1 rejection, 2 rejection. We're in the vicinity. This can be 3, 4, 5 rejections towards this zone, a strong area of support / resistance. So the moment price had the breakthrough, I would now just expect price to pull back, have the rejection as resistance to continue to go down. Why? Because we bounced so many times from this zone, treating it as support. Little, you know what I'm saying? Little gem right there. So now finding that area of interest, like we talked about, that's the last break of structure. We then mark it off. Now I simply want to see price pull back towards this zone. So if I fast forward, boom, as soon as we see price perform the break and retest of our zone, we see what? The daily time frame also performed the break and retest of its own zone. So now we see both time frames performing the break and retest. We have the pullback established. We have price tapping back into our zone. Now what are we looking for? We are simply looking for the bearish engulfing for our entry off of the secondary time frame. This is important because since I'm using a secondary time frame to find my entry zone, I want to use that same time frame to find my entry signal. Again, this is just a simplified version, not getting more in depth into the precise entries, but I'm just showing you how simple it is to find your entry zones using a break and retest pattern with the synchronization of 2 time frames, and then based off of those synchronization, how you just simply look for the entry signal bearish engulfing on that secondary time frame. So watch this. If we fast forward now and we simply wait for some type of bearish engulfing to be established in the market, you will see when we found our entry. So my entry came around here. If I take the drawings away, we don't have any type of entry signal. Why? Because I got more of a precise entry on the lower time frames. Like I said, it's not really important. But if I continue to fast forward, what do we see? Boom. We see price perform this bearish engulfing. We see this bearish candle engulfing past that previous bullish candle. And as we're engulfing past that previous bullish candle, we are also now below our daily structure point. We see that, right? Again, daily structure, price is below this daily structure, which now gives us an extra confluence to find our entry. So say we have our entry. I'm gonna delete this for a second. Say we have our entry now. We have our entry signal being this bearish engulfing. How do you put your stop? How do you set up your stop loss? How do you set up your take profit? Well, as far as for your take profit, since you're using the secondary time frame, 4-hour time frame, you used it to find your entry zone, you would just simply use the 4-hour lows for your take profit. I always put it at the wick because typically when I'm right about my trades, price pushes further than just the body of the candle. So I do recommend putting your take profit at the body of the candle. Once you get more comfortable with the strategy itself, then you can just start adjusting it to like the bottom wick. That way it's just giving you more profit on the back end. It's nothing really fancy about it. So that's how you find your take profit. As far as your stop loss, once we enter this candle, that engulfing candle, I'm simply going to use that previous bullish candle. I'm gonna put my stop loss starting at the top of that bullish wick, and you see how my stop loss is at 68 pips. I'm simply going to add 10 pips to give me enough breathing room just in case price wants to play around and, you know, do its little thing, to breathe a little bit. And this is my area to where I will look for price to not pull back to, in other words, because now say if price does pull back towards that area of interest and it takes us out of this trade, well, this is a area where I want to be out of this trade because this is an area that allows me to see that this trade was invalid. I don't want to put my stop loss at an area of where price can tap back into, wick us out, and then have a continuation. No, I want to put my stop loss in an area where price, if it taps into, I'm completely wrong about this trade, and now I want to walk away from the setup if it comes down to that. So that is why I start at the top of the bullish candle's wick, and I simply just add 10 pips because this now gives me enough breathing room to where if price does break past that previous bullish candle, the candle we just engulfed and got our signal from, this setup was invalid and I don't want to be in it anymore. So now we found our entry. What happens if we fast forward? Price almost hits our stop loss. You can obviously see we formed another rejection towards this daily structure point, also being our entry zone on a 4-hour. Price then has the continuation and we go directly towards targets with ease. Why is that? Because, well, it plays around a little bit. I always say, if price, you know what I'm saying, I'm either right or wrong, so I always wait until price hits my full targets. So you can see once price hit our take profit at 2 for a 2.89% in return, you would have won this trade. Simply just looking to identify the daily and the 4-hour being in sync, and we use the 4-hour time frame, secondary time frame, for our entry zone and as well for our entry signal. A very simple, straight to the point setup, and that's how you would execute on this position. Give me a second. I'm about to go to the second example, and we're about to get into that one as well. Second example, USD CAD, another floater market setup. I really don't like, hold on, give me a second. I'm about to go to a different chart. I don't like how these candles are looking. All right, so again, don't pay attention to all the extra drawings. These are just me. These are my drawings from previous trades. So if we set up everything, you are about to see again how we synchronize, well, how we just sync 2 time frames to our advantage. So on the daily time frame, we're going to go into replay mode so we get a better version of the execution, or clear image of the execution. So daily time frame, I simply just draw a structure. I see that price was in this bearish trend. We then had all these pivot points, and I call these pivot points because in the market, I'm only looking for my lower high, lower low. Everything that's happening in between my lower high and lower low are just pivot points. Why? Because it doesn't give me a break past my high showing me more structure, or a break past my low showing me more structure. Everything that takes place in between my 2 given structure points are irrelevant in my eyes until we have a break of structure. But the moment price then gave us this break of structure, breaking past this lower low, we now see price in a clear bearish trend, and we see the recent break of structure getting established here, which allows us to now have this new lower high. We then have the break of structure, and then prices potentially forming its lower low around here, right? But as soon as price gave us this break of structure on the daily time frame, I went towards a 4-hour to see if we were in sync doing that exact same thing. As I went towards a 4-hour time frame, we see clear as day the 4-hour doing that exact same thing, going from this bullish to bearish trend, performing the break of structure as well. So we see the daily perform the break of structure. Let's delete that, it's confusing. And we see that the 4-hour is performing a break of structure. We now have both time frames being in sync, heading towards the downside, performing a break of structure at the same exact time. So now, how do we find our entry zone? Well, we use the secondary time frame that is in sync to find our entry zone, and we're simply looking for the last break of structure. So if I'm drawing out structure, we see clear as day that price is in this bearish trend. As price is in this bearish trend, we have the continuation move giving us the overall break of structure establishing around here. And as soon as we, oh no, we had that break happen here. Okay, my fault. So we see the break from bearish to bullish happened here, breaking past this lower high portion. We see these highs broke past here, and then we see price go back bearish due to the breakout of this higher low. As soon as we saw this break of structure, one, we mark it off as our break of structure, and we can then draw out our zone, aka our entry zone. So as soon as we saw that, we then drew out that zone, and we just count now the number of rejections. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 rejections towards the zone. Well over 2 rejections, the minimum rejections that I'm looking for. So therefore I will be using this zone as my entry zone. So now what do we want to see? Well, I simply want to see price pull back towards this area, which we did. Boom. We see price perform the break and retest towards our recent break of structure, which also allowed the daily time frame to perform the break and retest of its own structure as well. And keep in mind, what do we say? Now for our entries, we want to be below our daily area of interest when we are in sync. If we go back towards the chart, we see at the moment that price performed the pullback towards this recent structure, but at the moment we are above our daily zone. Therefore, I'm not really interested until price can show me some type of entry signal, getting back below my daily structure point. We've already seen the break and retest with the rejection towards our zone. Now I'm looking for my entry signal off of my secondary time frame. So if I fast forward, boom, you could have got in on this first original entry showing you that bearish variation pattern. And again, only thing a bearish variation pattern is, it's not complicated. You would see that bullish candle, and then after you see this bullish candle, you will see a bearish candle not having enough strength to engulf past that previous bullish candle. And then you will see another bearish candle open up, the second bearish candle. And on that second bearish candle, not only are we engulfing past our previous bearish candle, but we are now engulfing past that previous bullish candle, engulfing the wick and again, the entire body of that candle. So say if you want to enter around there, you could have found your entry here. Stop loss starts at the top of the candle's wick that we're engulfing, the bullish candle's wick. You can see that's at 90.6 pips. What do? We add 10 pips, which now puts us at 100.6 pips. And I'm first targeting the body of these candles, my previous 4-hour low. I'm using a 4-hour area of interest. I'm using my 4-hour lows for my take profit. You can obviously see I'm only getting back a 1-to-1, which is not something I recommend. I always say put your take profit to where you're getting back a 1-to-2, which will be around here. I'm an intraday / swing trader, so I look to at least double my account every single trade. I'm not looking for a 1-to-1. I'm looking for a 1-to-2 and above. So now we have our entry, we have our stop loss, and we have our take profit set. Let's see what happens. Boom. Price would have hit our stop loss on the first go around, which is completely fine. Why? Because we are still maintaining in a bearish trend. Until we can go and break past this this lower high, I'm not too worried about it. As long as price is still respecting my recent break of structure, aka my entry zone, and we see another rejection, I will then be looking for another opportunity to enter this trade. Because 1, the daily time frame is still bearish. 2, my 4-hour time frame is still bearish. And 3, I just want to see price finally get back below my zone. You're not going to win every trade, but as long as you're identifying the structure in the market and it's still maintaining in the overall direction we're looking to take it, fam, continue to look for entries. So, okay, we lost the setup. That's completely fine. If we fast forward, what happens? Boom. We then have our second opportunity being here. If I take away the drawings, we see that this bearish candle engulfed that previous bullish candle, showing us the bearish engulfing. We then can find our entry like so. Put your stop loss, boom, top of that wick. We're at 130.5. We add 10 pips, put us at 140.5. This is an ugly entry, but I'm just showing you the simple technique of if you wanted to just trade the break and retest. Put our take profit at a 1-to-2, and then let's fast forward. Let's see what happens. Boom. Price would have hit our targets for a 1-to-2 with ease. So yes, you lost the first setup, but the second setup, because of this structure was still valid, we were able to find our bearish engulfing, price be below our daily structure point, set up our take profit, set up our take profit, set up our stop loss, and win this trade based off of the simple break and retest, bearish engulfing, and letting the trade ride. So amazing setup. And yeah, that's simply it. That's how you find your entry zones with the flow of the market. So I'm about to show y'all the 2 examples of counter trend opportunities. So give me a second and we're about to hop into it. All right, so now this is a counter trend opportunity. I'm not going to start on the daily time frame because again, I'm not going down the whole top down analysis. If you want to check out the full top down analysis strategy in the in-depth detailed video, go check it out. Made another video talking about counter trend entry, how I found my counter trend entries or something along those lines. I'm gonna pop it up, but yeah, go check out that video. But starting on the 4-hour time frame, right? If I'm starting on the 4-hour time frame, going back to towards this image, the 4-hour and the daily is I'm looking for the exact same thing. I'm simply just looking for the recent break of structure, which will then allow me to see that the 1 hour is performing that recent break of structure. We look for the retest, boom, boom, right? It's the same concept with the daily and the 4 hour. Now we're just dropping down I say one time frame, even though it's not. We're just dropping down time frames, and now I'm looking for the 4 hour and a 1 hour to be in sync. Again, using the same exact thing, same exact steps, and I'm about to show you now. So starting on the 4 hour time frame, right? We see what? First thing I want to identify is that price has already broke back below our daily structure point, identifying that we are below that daily area of interest for us to be able to enter these positions. So that's good. Two, we see that price was in this bullish trend that then went bearish due to the breakout of this higher low, right? And as soon as price performed the break of structure, if we go back into replay mode, we can see price perform that break of structure clear as day. And then as soon as we saw the break, this is when I went towards the 1 hour to see if we were doing the exact same thing. On the 1 hour time frame, we see clear as day price is doing the same exact thing. We see the last break of structure happening on the 1 hour around here, and we see on the 4 hour time frame the last break of structure happening around here. Both time frames performing the break towards the downside, as we can see. 4 hour, 1 hour, doing the exact same thing. This is great because now what do? We use the secondary time frame that is in sync to find our area of interest / our entry zone. In this case, the secondary time frame that's in sync is our 1 hour time frame. How do you find your area of interest, ladies and gentlemen? You simply look for the last structure break. So if we drag this out over here, what can we see? That the last structure break was around here. Why? Because price went from this bullish to bearish trend with the first break of structure happening here. Price then had the retracement and then a continuation showing us another break of structure around here. This will be known as our last structure break in the market, and we would then use that as our entry zone. So if we drag that back here, we see that this is the last structure break, and this is when we grab that box tool and drew out that zone. Now count the number of rejections towards the zone. We have 1, 2, we can count this, 3, 4, 5, 6, 7, 8, 9, like well over 2 rejections. Again, the minimum that we're looking for in the market, we have that. It's solidified. Okay, cool. I can now use this zone. So the next thing we do is we just simply wait for the tap back into. And then once price taps back into our zone, boom, we tap right back into our zone. We see the break and retest on the 1 hour, which allowed the 4 hour to perform the break and retest as well. This is good. Now we simply just look for our entry signal off of the secondary time frame. This case being the 1 hour time frame. So if we fast forward, we wait for that entry signal. Boom, right? It's not the prettiest, but we still got the signal. We got the bearish engulfing past that previous bullish candle. I will then find my entry like so. My stop loss starts at the top of that previous candle bullish wick. You see we're at 32.8. I simply add 10 pips, putting us at 42.8. And for my take profit, I told y'all already, I look to target my 1 hour lows. In this case, I was not getting back my 1 to 2. So what did I do? I simply adjusted price until adjusted my take profit until it said a 1 to 2 risk reward in return. We got our entry. Let's see what takes place next. I can always just click the play button. I'll be getting tired of hitting my mouse click. Boom. Price would have hit our targets with ease. Yes, it bounced around, played around a little bit. We almost hit our target first go around, but it didn't happen. Again, I wasn't worried. I'm not about to close out the trade. Why? Because I trust the analysis I just performed in the market. And if you would have allowed price to fully play out, you would have got back your 1 to 2 based off of the simple break, retest, bearish engulfing entry signal. And you would have walked away. Like simple as can be. Again, my entry had more of a precise, we still got the same risk reward in return, but you can obviously see I got more of a precise entry based off of the lower time frames. If you want to check it out again, go check out that video, how to find your sniper entries. Again, I'm gonna pop it up. I don't believe the title is named that, but I'm gonna pop it up for y'all if y'all want to check it out. Let's get into this last example so we can close out the video and y'all can begin to study the market. So give me a second. Last example, CAD JPY. we see clear as day. Again, I'm only on the daily time frame to show y'all that price is maintaining underneath our structure point. So if we go towards the 4 hour, right, it'll be a clear image of that. So on the 4 hour time frame, we see clear as day that price is underneath this daily structure point, already identifying that we are below our zone, which gives us that confirmation that we can be looking for these entries. So on the 4 hour time frame, what can we see? We see that price was in this bullish trend that then went bearish. We see that price went bearish due to price performing the break of structure around here, going from bearish to bullish. And then we have the flip once again, breaking past our recent 4 hour lows. As soon as we saw the break past these 4 hour lows, this is when, let's go into replay mode. Boom. As soon as we saw that break of structure, this is when we went towards the 1 hour to see if we were doing the exact same thing. On the 1 hour time frame, we see clear as day price performing the breakout around here. So now we see that the 4 hour time frame is bearish. We see that the 1 hour time frame is bearish, and we're both presenting the break of structure at the same exact time. This is good because this shows us that we are in sync in the market. How do we find our entry levels, ladies and gentlemen? We use the secondary time frame, and we just simply look for the last break of structure in the market. So as we're drawing out our structure, we see that price was bullish, that then broke bearish with the recent or last break of structure happening around here. This is when we, again, grab that box, we draw out our zone, count the number of rejections. We have 1, 2, 3, 4, 5, 6, and I bet you we have more over here towards the left, but I saw 6 rejections. I'm more than happy. So now we have that entry zone. We simply want to see price pull back towards our entry level. So if we fast forward, what happens? Price then taps back into, as we can see right here, we're in the vicinity. It's not going to always tap into your entry zone, but we are in a vicinity of our entry or area of interest. I was about to say areas. We are in the vicinity of our area of interest. We see the rejection. We see price maintain below. That is more than enough for me. Now I'm simply looking for my entry signal on the 1 hour time frame or my secondary time frame. We fast forward and we can be patient and we wait. What can we see? Boom. We see clear as day, price present us with this beautiful bearish engulfing past that previous bullish candle. You would have then found your entry like so. Your stops start at the top of that bullish wick. We're at 16.7. Add 10 pips will be putting us at 26.7. And then first targets will be your 1 hour lows. Obviously, you're not getting back to 2-to-1 risk to reward. Adjust your take profit until it says a 2-to-1 in return. And now you simply just allow the trade to ride out. You would have hit your take profit with ease based off of the simple break, retest, bearish engulfing for your entry, and allowing the trade to ride. This is a simple technique you can use if you want to just break it down and keep trading simple. Look for 2 time frames to be in sync. I'm gonna pull up the image again. Daily and the 4 hour time frame, or the 4 hour and the 1 hour time frame. Once we have these 2 time frames in sync, simply identify your area of interest based off of the secondary time frame that is in sync overall. This allows us to find a high probability zone. This allows us to find our area of interest with rejections, 2 or more rejections. And then after we see price tap back into our entry zone, simply look for the entry signal, bearish engulfing. Once you have that bearish engulfing, let the trade ride. Make sure you're below your daily structure point, which I showed you how to do. And if you are below, bro, simply just allow the trade to run. Stop being skeptical. You did the analysis. Trust your analysis. If you don't trust yourself, you're not going to be a trader, because at the end of the day, traders must trust their analysis. How do you think you make money in the market? Nobody's clicking a button for you. Nobody's doing the work for you. You're doing the work, which means you have to be the one to call out that execution. And if you don't trust that execution, you don't trust yourself to make money or be capable of making money in the market. Trust the analysis, trust your plan, and allow everything else to work out. That's it for this video. I pray that you all learned something new. Try it out, see if it works, see if you enjoy it. I'm not a financial advisor. I'm just showing you what I do in my day-to-day trading and works best for me. If you like it, like always, leave a like on the video. Let me know down in the comment section if you learned something new, if you enjoyed it. And if you want more information or more in-depth detail on how to apply this fully, go check out the YouTube videos itself on my channel. And if you want more time to reach out to me one-on-one, or just simply be in a like-minded atmosphere, individuals learning how to better themselves in trading, learning how to become a profitable trader, I do have a Discord down below. Link will be in the description. That's it for this. I'm gonna catch y'all later. Y'all have a blessed one. Deuces.